with perspective on markets. The indices, by the way, have pulled back. We're down just 40 points. So I was saying this earlier, 4 days in a row we've been down. As of yesterday's close, we didn't break the 20-day moving average. I mean, it's a marker for near-term trend, up or down. So there are chances for bounces. And the fact is, and I've been saying this repeatedly, volumes last 2 days have been very, very thin in the US. So, when volumes are so low, both on the upside and downside, don't read too much into day-on-day kind of movements. Let's talk about the credit cards business now. And a bit to further deepen the reach and usage of UPI, the Reserve Bank has allowed the linking of credit cards to the UPI platform. What does this really mean? How will this work? And what's the opportunity? Rama Mohan Rao Amara is Managing Director and Chief Executive Officer at SBI Cards. He's joining us right now with some perspective. Thank you very much, sir. Great to have you with us here. Good morning, Prashant this side. So, making credit cards available through the UPI network. Can you explain to our viewers what exactly is the proposal? How will it work? And then we can get into the pluses and the negatives. Go on, sir.
Yeah. Good morning, Prashant, and thank you for inviting me to the show. Yesterday's development is a positive development, particularly from a customer perspective. Hitherto, when you want to be on UPI, you have to link your deposit account, either a savings account or current account, and you have to pay immediately. You will be drawing your own balances in the deposit account. But now with this, a RuPay credit card can be linked to UPI with an option to spend and pay later as per the billing cycle of the credit card. So that way, it improves the convenience of the customer. It enhances options available to the customer. So typically, small value transactions, I think predominantly UPI is used or cash is used. I think there is a likelihood of them also moving to credit card once this integration is in place.
So, Mr. Rao, if this is extended and SBI cards, etc., also come into the fold, so I can use my UPI ID to make the payment. I don't need the plastic with me to swipe and make the transaction. Is that what this means?
Absolutely.
Okay.
It's like an online transaction kind, practically. Yeah.
Okay. But the issue with credit cards has been MDR, right? UPI, the benefit, the great advantage has been the convenience. Of course, what the RBI wants is to join and link the two, but just come in on that point.
Yeah, you are right, Prashant. That way, credit card is uniquely placed as compared to a debit card or a kind of using UPI and operating on the deposit account. In as much as free credit period is there, which is actually funded by the card issuer. So obviously, that has to be taken into account in terms of pricing. So zero EMDR cannot be the situation, but that can be the expectation. But the reality is like the issuers have to be defrayed for the cost of funding. So I think total pricing structure will have to evolve now. I think we are expecting that consultations will begin between the industry and NPCI. Where we are confident that some kind of structure will come out which balances the interest of all the stakeholders.
Okay. So for now, Mr. Amara, good morning. You've said that it will improve the convenience and enhance options of spending for the current users, right? But I think the larger theme is to get more people into this space. So will it eventually increase card spends and increase the number of customers? Are you looking at that for the industry and any kind of numbers that you can share with us?
I think, as I said, generally the consumer behavior is not to use the card for a very, very low value transaction. So to begin with, at least for the existing customer base, will start using it. But eventually, some use cases can come out of this entire integration with UPI, where players can figure out as to how do we attract even the new customers.
Right.
Since we're talking about spends, right? Card spends, and of course, in the last quarter, at least in April, there was a decline in spends at the industry level, which was a negative surprise because there was a holiday season as well. So one would have assumed that spends would go up. Can you tell us what the outlook is over the next couple of quarters? Because in general, ever since this whole digital payments process has started, at least on a personal level, I've stopped using my own credit card because it's just easier, I guess, with digital payments now. Can you tell us what is the outlook on spends per se?
Actually, when we look at April spends and compare the run rate vis-a-vis the March, actually the run rate remains same. I mean, you know, like March has 31 days and April happens to be 30 days. That way, the run rate wise, it remains the same. Even the category wise also, while there are inflationary pressures, etc., which can potentially or theoretically impact a kind of discretionary spends. When we studied our own spend behavior across the categories, we haven't seen any letdown in or any slowdown in the discretionary spends. Particularly when we look at like a last quarter, March quarter, the segments like a travel and entertainment were subdued, but which have seen a strong revival, strong comeback actually in the last 2 months. So we are hoping that actually the spend momentum, whatever is there, it will continue. And to share one data point, like the credit card industry spends have actually crossed 1 trillion both in the month of March as well as April, which used to operate around 65,000 crores per month, maybe a year back. So that way, the industry has seen a kind of wide adoption of credit card, and it has seen actually a good growth in the spends.
Mr. Rao, just to come back to pricing, right? You began by saying initially that the card issuer will have to be made good the expenses for funding the customer when he makes the payment. Do you see wide adoption for this? I mean, I again come back to the basic point. I mean, the big benefit is no charges when you use UPI, which is not the same with credit cards. So, you know, will merchants accept this? Do you expect pushback? I mean, just how you said consultations will begin, but what will your proposal be?
Even before this, credit card was actually indirectly on the UPI rail, but in a very limited way. By partnering with the payment service providers, it has a limited use case. But now what's going to happen is instead of the 6 million point of sale terminals, which are credit card ready, suddenly now the merchant universe increases to 50 million. Yes, I mean, as I said earlier, the expectation of a automatic zero MDR will have to be balanced with the cost defraying for the issuer. This is the kind of negotiation that will have to happen with the NPCI, and then I'm sure some kind of structure will come out which will balance the interest of everyone. Other way of looking at this credit card income profile wise, it's not only the fee income, which is definitely a major part, but some part of the spends also get converted into kind of close-ended loans. So where you stand to gain some interest income, you stand to earn some interest income. So as an issuer, when we're negotiating with the NPCI, we will take everything into account and arrive at a kind of structure which can balance the interest.
Okay, got that. You know, you have been losing market share for about 2-3 quarters now to names like ICICI Bank. There is a lot of competition in this space now. And I was going through the data between September of last year and March of this year. SBI Card added about 1.36 million, while ICICI Bank added 1.5 million, Axis Bank 1.7 million. So there's really competition heating up. What are you doing to retain your market share, say, over the next 6 to 12 months?
As I said several times in the forum, I mean, our strategy is more aligned to like what is our appetite, what is our capability, what are the channels that are available, and what kind of partnership commitments are there. Based on that, we fix the internal targets with an aim to actually attain a sustainable growth while keeping an eye on the market share. If you look at our gross issuance quarter on quarter, it has actually increased quarter on quarter. From a 600,000 plus around in the first quarter of last year, it actually increased to 1 million kind of run rate every quarter during December and March quarter. So we propose to maintain the run rate and actually improve it further. Obviously, market share is also determined by the net growth. It's not only the gross issuance, the net growth. So we're also simultaneously looking at how do we ensure the leakages by way of surrender of cards, so which can actually result in a increase in the net growth. So we will finally always look at like what options we want to give to the customer, what products we want to launch, and how do we meet the aspirations of the customer. So this is a continuous journey.
Okay, got that. One good thing is the credit cost has declined quite a bit. The restructured book is also at just about 1%. Do you think the worst of the stressed asset situation is over for SBI Card?
We have been demonstrating a kind of quarter-on-quarter improvement. In fact, the Q4 credit costs alone on a standalone basis, when we look at, they're almost like accounting for a one-time kind of reversal in the provisioning. It has actually come down below even pre-COVID level. This has been on account of the share of RBI portfolio coming down gradually, which is now just around 1%. Even the whatever portfolio remained, they are all performing. So the RBRE related stress has significantly has come down. And the BAU portfolio is behaving. Our collection efficiencies in BAU are almost on par with pre-COVID. Given the current external environment, we don't see any major stress on the credit cost. We will continue to maintain the credit cost in a band what we were operating during the pre-COVID period.
Since we are talking about competition, sir, one last question before we let you go. Not just from other banks like ICICI Bank, but also because of fintech companies, new age fintech companies that are using the digital payments route. There has been a lot of competition from that side as well. Are you looking to collaborate, because that may be perhaps the only way to survive in this fintech space? Any new collaborations that you'd be looking at? And what do you see as the triggers, the growth triggers for the company going ahead?
We have some ongoing partnerships with some of the fintech players like the Paytm, Vola kind of players, where we are looking at a kind of segment of customers like new to credit card. That means they don't have a bureau history, but they have some financial transaction profile. So with the benefit of these partnerships, we have the capability now to consume this alternate data and underwrite these customers. So we have gained a fair amount of confidence. The numbers from these partnerships, while they're still low, they have been steadily increasing. So one thing is, from a unit cost perspective, earlier we were limiting ourselves to maybe a 25,000, 30,000 per card kind of limit. Now with the digital channel, which we are building now, we have the confidence that we can actually go up to maybe 15,000, 20,000 also. So that confidence is coming only because of our confidence in the lowering the cost of acquisition, because traditional channel, the cost of acquisition is high. So that is giving us the confidence. So these are all the various measures that are in place to ramp up the volumes and to be in the game.
Okay. All right, Mr. Rao, thank you very much for your time. It's a pleasure. Appreciate you joining us here on CNBC-TV18. Thanks very much for joining us. Well, the market is coming back, and how? We're down just about 35 points now. So 16,320 is where we are at. So slow and steady, but it's basically drifting higher after a weaker start. I mean, the open was the low. Right after the open, the low was made over 100 points as compared to yesterday's close. But now, about 60-65 points has been recovered on the index. We'll take a very quick commercial break here. We are back, and we continue to discuss the implications of the repo hike by the RBI, and of course the view that rates are going to go maybe a bit higher. So we have Shriram Transport Finance, the company, joining us on the other side to take us through the implications for their business. Back in 2. Later, we'll also be speaking with Sunita Reddy of Apollo Hospitals, as India's COVID cases are on the rise once again. The view from a large hospital chain like Apollo coming up.